Build Your Dreams, BYD, has emerged to become a significant contender to the leading electric vehicle brand in the entire world, Tesla. In the third quarterly report of 2024, BYD said that they had achieved revenues of over 201.1 billion Chinese yuan, which is about $28.24 billion, with net profit coming in with over 11.6 billion yuan, or $1.63 billion. What makes this so significant is that for the first time ever, BYD had actually beaten Tesla in terms of quarterly revenues. Although Tesla's net profit is still higher than BYD, this difference has clearly shown that Chinese electric vehicle brands are catching up fast. Here's the data for both companies' annual revenue and net income, which shows that Tesla has been ahead of BYD starting in 2018. The gap between the two companies even widened massively in 2021 and 2022 as Tesla reported revenues of over 53.8 billion and 81.5 billion, respectively, whereas BYD, with only $32.8 billion and $60.1 billion. In the latest annual report, however, the gap closed fast, and as the quarterly report showed, BYD has overtaken Tesla in terms of revenues. But Tesla is still ahead in some key financial metrics, like their net profit. Furthermore, Tesla is leagues above BYD when it comes to market capitalization. Market capitalization, or for short, market cap, is a company's valuation. Here's a comparative graph to show you just how far Tesla is compared to BYD. Tesla currently ranks as the 8th most valuable company globally with a current market cap of over $1 trillion. This also makes them the world's most valuable car company there is. BYD, however, is only ranked as the 150th most valuable company globally with a market cap of just $109 billion, making them the 3rd most valuable car company. Their valuation is indeed nowhere near that of Tesla. But as many investors know, a company's market cap doesn't define how strong or robust a company is. It's only defined by the market itself. As a matter of fact, it is even possible that one day BYD could be selling much more vehicles and gaining more revenues than Tesla. Yet Tesla would still be much more valuable than BYD itself. And many speculate this to be because of where their share listing is. Tesla is listed in American stock exchanges and BYD listed in Chinese stock exchanges. But their valuation isn't what we want to know today. What we want to know is how BYD slowly surpassed Tesla in these quarterly results, and is this even sustainable in the future? Will BYD continue to take a big chunk of share from the electric vehicle industry from Tesla? Well, to understand that, let's first see how BYD even got to where it is today. BYD's rise is driven by several factors, but the most significant that we see today are due to government support, aggressive expansion, and a strong domestic market. Let's first talk about government support. BYD has received significant government support in the form of subsidies. That's because the Chinese government has been actively promoting the electric vehicle industry as a cornerstone of its strategy to reduce pollution, achieve energy independence, and secure a leadership position in emerging technologies. Here's a table with data gathered from the Center for Strategic and International Studies. It shows the industrial policy spending for China's EV sector. As you can see, there are various forms of subsidies, including rebates, tax exemptions, procurements, infrastructures, and so on. From 2009 to 2023, the CSIS said that the total government support amounted to a massive $230.9 billion. This is no small figure, and if the Chinese government were to buy a company today with this amount of money, they'd actually be able to buy Toyota itself, a company worth only $226 billion as of the time of writing. This goes to show just how big the Chinese government had been providing for their car companies. To BYD, however, It was reported by Germany's Kiel Institute for the World Economy that BYD itself received $3.7 billion in direct aid from 2018 to 2022. While these are seen by some as a game changer for the Chinese technology industry, it is actually seen as a controversial thing to most Western nations. As a matter of fact, both the EU and the US have been placing tariffs after tariffs on Chinese electric vehicle brands, including BYD. News reports say it's because of these subsidies, but it is also possible to say that the EU and US companies are just trying to protect their own local brands. If Chinese electric vehicles were to aggressively expand inside their markets, it could threaten local automotive brands like Europe's Volkswagen, BMW and Mercedes to America's Tesla, Ford and General Motors. This is what we are going to discuss next. Aggressive expansion. BYD has been aggressively expanding into international markets. As of the third quarter of 2023, BYD's overseas car sales amounted to over 94,477 cars, an increase of over 32.6% from the year before. Here's a graph of BYD's revenue breakdown by locations of customers. Data gathered from BYD's annual report of 2023. As you can see, in 2023, over 73.4% of their revenue comes from China, including Hong Kong, Macau, and Taiwan. Only 26.6% of their revenue came from overseas. But despite this small amount, in 2024, BYD is expecting to have over 450,000 vehicle exports this year. But will BYD really be able to continue its expansion internationally as compared to just staying in China is an important question to ask. That is because the reason why they are doing so well in China is, as we just mentioned earlier, strong government support. In international markets, however, not only are they fraught with competition, they may also not have the Chinese support that is necessary to actually make good sales. The only good part about BYD's cars is that it is insanely cheap. Some of the cheapest cars for sale by BYD are the likes of BYD Dolphin, which, as some news reported, are the cheapest electric car in some key markets. They even once launched the BYD Seagull EV Honor Edition, which starts at an insanely low price of just 69,800 yuan, or just $9,700. Comparatively, Tesla's cheapest model cost over $29,990 for their Model 3, according to their official website. This huge difference in price, not limited to the BYD Seagull EV Honor Edition, indicates that BYD has what it takes to enter developing markets like Southeast Asia, which may favorably want a cheaper alternative than a luxury version. Thirdly, and finally, the most important reason why BYD has overtaken Tesla and may actually become the world's largest automotive brand is because of its strong domestic market. China is the world's largest auto market. They have more than 1 billion people and are continuously buying cars after cars every single year. As China transitions into more electric vehicle sales, BYD will benefit tremendously. Here's a graph of the number of new electric cars sold from 2010 to 2023, data gathered from the International Energy Agency. As you can see, in 2023, over 8.1 million electric cars were sold in that year alone. Comparatively, the US only had 1.39 million. This huge gap creates a big market advantage to BYD, which is something they are already taking advantage of today. Here's another graph to show you China's top 20 EV sales by model. It shows that BYD Song, BEV plus PHEV, has taken the entire market by storm, followed by the Tesla Model Y and then more BYD models. This market share ensures that BYD has a continuous flow of money coming into its pockets, money that it can use to expand into foreign markets. This is also why BYD has already overtaken Tesla in global passenger battery electric vehicles in the fourth quarter of 2023. with sales amounting to over 529,409, whereas Tesla, with only 484,507. The only place where BYD might lag behind Tesla is that BYD still sells plug-in hybrid models, which are not considered pure electric vehicles by some industry purists. Tesla, on the other hand, focuses exclusively on pure electric vehicles. And in the recent quarterly results that we talked about earlier, BYD had actually seen slower growth sales of their pure EVs, seeing a 2.7% slowdown as some news outlets reported that it has lost share to other EV rivals in China. It was only because of their plug-in hybrid models, which jumped 75.6% on the year to 685,830 units in the third quarter, which helped BYD emerge with higher revenues. Regardless, BYD still has a lot of fighting chances to actually surpass Tesla completely. As a matter of fact, it might be possible. With the help of the Chinese government subsidies and a strong domestic market to make BYD the world's largest electric vehicle automotive brand. But anyway, do let us know what you think. Thanks for watching.